Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 17th of June. All right, now, pretty good news. The US retail sales figures that came out during the North American session, there's two things here. Massive jump up in the sales. Now, that's probably expected as the rollback of the lockdowns came out. But the good thing is the actual data reacted very nicely on the equity markets, right? So, and also the dollar moved higher on this. So what we're seeing is this is really the first significant sign where the economic fundamentals, the macroeconomic fundamentals, are impacting the dollar, and we've get clear direction out of that. So that's a really good sign for trading. And if I just bring you across to the majors, okay, this fitted in quite nicely with a lot of these pairs, right? So what we have is, what screen am I on here? Let's get over here. A situation where the Aussie, now I still like the Aussie and Kiwi lower. It's a little bit weird because we've seen the dollar rally, right? So there was a risk on, risk off profile happening in the market. So risk on, equity markets rally, the Aussie, Kiwi and CAD rally. Now, the situation is we've got a US number, really strong numbers, and usually that would give the US dollar a nice underlying bid tone, like make it go up. And that's happened. Equities have gone up. So what we've seen is the risk on, risk off profile disconnect, and we're back to a strong dollar reacting off strong economic numbers. So to me, that should push the Aussie down, okay, and the Kiwi. It's been a bit of hard work for those two pairs. What we did see quite nicely is, as I was looking at yesterday, the false break opportunity here, Euro, as I was saying, coming into Monday trading, seeing Euro down at 112.50, you see it up at 113.50, must be licking your lips thinking, well, this is a great opportunity to get short. I was looking for a false break trade. Looks like I've missed it by a pip. And it's 125 points lower, so that's sort of nice as well. And sterling, well, it's now sort of forming some shape and sort of moving down towards the downside. Now, the other thing about this is, okay, we've got the macroeconomics impacting the dollar, perfect. What we also have here is we've got most of the major pairs with technical levels both sides of the market. So what we can do now is really track the dollar, okay, and see where the best trading opportunities are. So a lot of these pairs, dollar CAD, Aussie, Kiwi, sterling, have support and resistance levels on both sides, and they're going to create potential entry levels for us. So make sure you keep an eye on that. I'm still thinking the dollar, okay, this is really good news for the US economy. I think the dollar is going to continue to rally, right? We see Aussie, Kiwi lower, Euro even back down towards 111. And I can actually see sterling easy back down towards 123. It's a little bit looser than the other pairs. Now, the dollar pairs, okay, dollar yen is just really tracking sideways. It doesn't want a part of anything. But and dollar CAD's going to do hard work because oil is still sitting around 37 bucks. The dollar wants to rally, but that stronger oil price is going to offset the dollar move with a stronger CAD. So that's a little bit tricky. So make sure you're aware of that as you go forward. Now, if I just bring you back across, give you a look at the basic summary on the Forex Daily Market Insight page. Okay, so trading conditions, you know, they're pretty good. Okay, like right now, this is a microcosm short-term move, but it is good to see that we know exactly what's happening. Now, you come down to the major pairs here. The dollar pairs, to me, they still haven't moved enough to sort of work out what's going on, so I'm not exactly sure. You'd think with the dollar going up, they've got to start going up. As I said, oil is messing around with dollar CAD. Dollar Swiss doesn't want to bar a bit either. But what we do have is we have some other pairs here, Euro, Aussie and Kiwi with sort of, to me, much clearer sentiment. Sterling, well, you got to think it's got to follow the other pairs down, but to me, it's a little bit tricky. Now, and if you're looking for some trade ideas, check out the ones here. Obviously, the Euro, this puppy here, I mean, quite painful. It was within a pip. You can have a look. If you click through there, you'll see the finite or minute details. Now, keep an eye on this, right? So we've got US data impacting the market. So when you come back to look at the macroeconomic data, you've got to start sort of factoring in okay, maybe some of these numbers are going to come into play. So keep an eye on UK CPI today. We've got the final CPI numbers out of the Eurozone. It'd be really nice to get weak European numbers here because it already goes with that weak sentiment, right? That's something you've got to be looking for. We've already got that moving to the downside. Now, you've also got US housing starts, Canadian CPI, and US crude oil inventories. Right? If there's any major shifts there, we could see oil move, and that may give us something on dollar CAD. And right at the end of the day, we've got the Kiwi GDP numbers. So plenty to look for. Okay, I think it's still early days to be jumping up and down thinking, well, all these numbers are going to impact. But the fact is, we've got the evidence here of the markets reacting to US numbers, gives the US dollar a big tone. So hopefully we start to see the US dollar start to track higher here on the index. The only thing I'm a little bit concerned about, right, this may be a little bit of, fundamental euphoria with the fundamentals coming into play. Because when you come back and have a look at the news, it's a little bit weird. Now, there's a few green shoots, okay, retail sales up. The Fed will be happy about that. But what we're seeing spikes in coronavirus infections in quite a few US states, across China, and a few other locations. So whether that's going to really slow down the US dollar move or really just nullify these recent moves, I'm not sure. But just keep an eye on it. It's sort of weird. The market is sort of brushing it aside at the moment. As the US states open up, there's a spike in infections. China's already experiencing that, as I mentioned. So we have to sort of keep a very close eye on that. The equity markets could turn around very quickly. So anyway, just have a look through your news and try and piece it together. There's a lot of work for the central banks to come. But as I said, really good signs that the data is impacting. All right, guys, that's it from me. I think we'll see a continuation of the moves, dollar higher and the other pairs down. It seems to be the way of it at the moment. All the very best. Cheerio.